What's up guys, Ben here and welcome to Motivation to Invest. Peter Lynch is arguably one of the greatest investors of all time. He was fund manager for Fidelity Investments' Magellan Fund. Between 1977 and 1990, Lynch averaged a 29.2% annual return consistently, more than double the market. This is what made Peter Lynch famous, as he has consistently beat the market. But that's not all. He's also been a great educator for newbie investors, and he's a firm believer that the retail investor and the average person on the street, the average person on Main Street, can beat the guys on Wall Street. So in this video, I'm actually going to reveal my take on Peter Lynch's top 3 rules for success. But before we dive in, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on if you want more investing tips and exclusive stock market picks, which I'm personally investing into. And if you want to take things a step further, why not hit that first link in the description below to be taken to the Patreon page. That is where you can find out more about the VIP membership group. This will give you access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire portfolio, the stocks and the story of how I built that portfolio to where it is today. But with that being said, let's dive in. So kicking things off at rule number 3 is chances are, if you like the product, you may like the stock. Now, as mentioned previously, Peter Lynch is a firm believer that the retail investor can beat the market, and there's good reason for this. So let's say the average analyst in Wall Street is sitting in a stuffy office in New York. He's there, he's on his computer all day long, and he's searching for great stocks. Now let's compare this analyst to a mother with 3 kids who's actually just doing some normal shopping in town. Now, this woman may identify new trends, new products. She may see certain shops busy for certain products selling out. So Peter Lynch's philosophy is that chances are, if you like the product, you may like the stock. So let's say when Apple iPhones were first released and you saw them selling out in all the shops, people queuing up for these iPhones, and you saw that physically with your own eyes, then that could be a good indication for you to go back, do some research, and actually find out more about the company. And this can actually give you a bit of a head start on Wall Street by using what I call an information edge. Now, if you can combine the due diligence and the stock research of a stock market analyst and the consumer knowledge and the cool factor of certain products that you see in stores, then that can be a winning combination. This brings me on to rule number 2, which is look for growth at a reasonable price, or GARP. Now, I'm a big fan of growth companies. Growth companies are great because they're growing fast. They're growing their revenues at least 15 to 20% per year, and that means your money, which you invest into these companies, could also compound at such levels. However, the major issue with growth is if a company is growing fast, and everybody knows about this optimism is baked into that stock price. So what Peter Lynch says is you should look for growth at a reasonable price. Now, this does seem like getting the best of both worlds, and it is very, very hard to achieve. However, there are a few examples of stocks I've personally identified on this channel. I've told you guys about them many times before, and they've actually skyrocketed since. An example of this could be a stock. It's a British stock called Boohoo. This was a stock which I invested in during the March crash. The stock doubled, then there was some bad news, it went down again, then doubled again, and many of you guys made a vast amount on that stock, so congratulations. And that was a great example of buying growth at a reasonable price, and the reasonable price was due to the bad news surrounding the stock, which I found out did not affect the company's fundamentals by actually speaking to the analysts on Wall Street who analysed the stock. This brings me on to rule number 1. Look for overlooked companies in poor industries. Now, generally, Peter Lynch has a great philosophy. He tends to look for these downtrodden companies and these companies in boring or overlooked industries because that's when he can find great deals. An example of this is actually a funeral company which Peter Lynch used to invest into. And who wants to invest into a funeral company? It's such a depressing industry to invest into, but it's also a very expensive industry, and it's also an industry which everyone will have to be part of one day. So Peter Lynch identified this trend, and actually a few of these stocks were 10 baggers. That means they 10x'd his investment. So let's dive into the share price for one of those. One was called Service Corporation International. Now, I'm not saying you guys should invest into this stock now. This is just an example of a stock which did 10x. So let's go back to 1987, $9 per share. Peter Lynch invests. And now it's skyrocketed there by 344%. It did drop back down in the year 2001. However, since 2001, it's actually up by 991%. This is a funeral company. This is not a fantastic tech company, EV company, cloud company, a company which is selling autonomous levitating cars. This is selling funeral products and services, but they are pretty expensive. So that's today's video, guys. I hope you found that valuable. Please comment below your favorite Peter Lynch investing tip. And if you guys found some value in this video, feel free to give it a big thumbs up, and feel free to check out that first link in the description if you want to find out more about the VIP membership group, where you can gain access to my buy and sell signals. So when I make my moves, you can make your moves, in addition to my entire six-figure portfolio, the stocks, and the story of how I grew that portfolio to where it is today. But with that being said, if you guys haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.